So now we're going to continue with FIT withholding. It is on tips also. And you have to report your cash tips to your employer by the 10th of the month for the following month if you got more than $20 in a month. Some employers actually assign how much tips they think you should have, but all tips are subject to FIT withholding. Okay? If the establishment is more than 10 employees, then the employer allocates the tips. And so this talks a little bit about how tips are addressed. This is a really sticky subject, but the law is pretty clear on tips. Okay, so we're going to continue with what else is FIT withholding eligible on. Traveling expenses. If you are reimbursed for travel expenses, it depends on how you're paid. If you're paid under an accountable plan, you're not subject to withholding. And it talks about the accountable plan as an approved plan that must meet 3 IRS sanctioned rules. We are not going to go into that on this slide or even in this chapter. If the company has no plan in place, then assume it's non-accountable, and therefore the employer must withhold federal income tax. Now, you have all heard people say, well, I have no taxes taken out. Well, yes, there are some payments exempt from withholding. Here's some of the list of things that do not have a withholding against. Payment received by church ministers. Advances for travel or other business expenses. So if your employer gave you $500 for travel you're going to be doing to pay for incidentals, that is not considered wages. Educational assistance. This year, an employer was allowed to pay $5,250 of loans and not have to pay taxes on it. Moving expenses for active military, because they move basically every 18 months. So this is a little bit of list. And on the next 4 slides is a more comprehensive list based upon the type of payment or individual and the conditions. I'm not going to read all of it. You go through and read this. So just so you know, there are a lot of exempt payments. Here's slide number 2, slide number 3, and finally my last slide. So all of these are exempt from FIT withholding. Now, there's some other things that are also exempt, and this is what we call pre-tax salary reductions. If your company has a cafeteria plan that you actually pay into, or any contributions to a flex spending account, this is where you put pre-tax money away for healthcare costs. These are not subject to the FIT. Okay. However, if you don't use up this money, you will lose it. Same with the HSA. All of these are pre-tax and exempt from FIT. And I think I have 1 or 2 more. Let's get them all in here. Actually, a couple more. So here's an example of a cafeteria plan. It could be accidental health insurance. It could be HSA. It could be dependent care assistance. And so you cannot put these items cannot be included in a cafeteria plan. Compensation for 401 contributions. You cannot put it in a cafeteria plan and therefore will be subject to FIT. I think I have 1 more. Okay, yeah, I do have 1 more. This is my last slide for video number 2. Tax-deferred retirement contributions. So this is like a 401k, 403b, or 457b. This is pre-tax money coming out of your check before taxes, so that it's basically not subject to federal income tax withholding. You'll actually pay taxes when you pull it out of your plan. So this wraps up video number 2 of what is subject to FIT, what is and what is not subject to FIT withholding.